Alright, hello and welcome to Camel Finance. I'm your boy Camel. A quick message to the members. That 10 bag of stock is getting very, very close to that entry, so I'm kind of expecting that to get hit today or early next week. So I'm keeping an eye on that. I will update you, of course, in the members only video on Saturday. Yesterday, of course, we had the CPI data come out, and you can pause your screen here and take a good look if you're not already familiar with it or if you're interested. But the long and short of it is the jobless claims were pretty much right around the expectations. We had headline CPI slightly above forecast for month over month, but below the prior readout and right around the prior readout for the year over year. Core came in right in line with expectation. So there's really not much more to say. Okay, I think the important thing to focus on here is what I was talking about yesterday. Now, I'm not going to go over this in the detail that I went over it in yesterday's video. So if you've seen yesterday's video, you already know what I'm talking about. If not, I highly encourage you to go and watch this section of yesterday's video because there was some really important information in there. M2 rate of change in blue. Here we are, all of this, okay? And it lags by 19 months, and here's the CPI below. So we have yet to feel the full impact. We have yet to feel the full force of this decline in the rate of change of M2. And thus, even though people are panicking right now and thinking that inflation is sticky, the Fed has to hike more and all of this kind of thing, the reality is this is probably just a short-term blip that's going to resolve to the downside. And the reason I bring this up again for a second time today is I think this sets a very, very nice trap. Now, nice for people that can see the trap, pretty nasty trap for everyone that can't see it. I don't think many people can see it, and therefore I think the trap is indeed set. So I'm going to elaborate on this trap. The trap is that people think inflation is sticky and the Fed is therefore going to have to continue to hike rates. But as you can see right here, okay, over 90% probability that we are going to see a pause at this next FOMC meeting. There's also a high probability, if I click off of this pen tool, that we're going to see a pause out to December's meeting and out to January's meeting. So the Fed is likely done raising rates. Remember, whenever this number is over 85%, like it is right now, then the probability of us actually seeing a pause is incredibly high. These are very, very seldom wrong when the probability is north of 85%. So we can say with high confidence that the Fed is probably done hiking. So herein lies the trap, right? We likely have left behind now a week 29 cycle low, as Bob Lucas has pointed out here, not yet cleared the 10-week moving average to confirm, and also not yet broken out of this downward sloping resistance line. But if we can do that, we can certainly say with confidence that there is a new weekly cycle ahead of us, and all the while we don't violate that low, then it's malpractice to be bearish. And this is what I think when I say there lies a trap here. This is where I think the trap is, right? The majority of market participants are so bearish. They think World War III is about to break out, and there are a million reasons to be bearish, right? But the market just doesn't seem to understand that whilst this is certainly a possibility, okay, this whole rollover is certainly a possibility. This could definitely happen. But first, we've got to lose these lows, right? And until we lose those lows, then like I keep saying, it's malpractice to be bearish. So with this little wobble in inflation, you're going to see a whole heap of people say, that's it, inflation's sticky, they're going to have to raise rates more. But as you can see, that's not the case, okay? Rates are not going to be raised more, and therefore we have this trap set where markets can do what they always do, which is move to harm the most amount of market participants. And the way we're going to do that is to make everyone think that inflation is sticky and higher for longer is the rhetoric, when the Fed is clearly done hiking and inflation is likely going to continue to come off. In fact, we're likely going to enter a period of deflation. Note the timing, okay? All of this at a time when the stock market has likely put a weekly cycle low behind it. Now, even if a weekly cycle low fails, you would typically expect 4 to 6 weeks of upside before it fails. So if we can get in somewhere in this neighborhood, we should be able to put some stops in place. And even in the absolute worst case scenario where we do get one of these setups, then we should still be able to get out without having to take on too much damage or give too much money away to stop losses. And of course, if I'm right about what's going to happen, and keep in mind, this is not a new call. This has been the call since all the way back here. If I'm right about what comes next, then it is indeed a run to all-time highs, and then we get that deflationary bust right around the time where this starts to catch up with reality and we do enter a period of deflation. So I think the trap is set. Lots of people don't want to believe all-time highs are coming. Lots of people seem to think that the only possible outcome from here is this is a counter and bounce that fails. And like I said, that is a possibility. But I also think, like I've said a bunch of times, the trap is set, ready to upset the most amount of market participants. And I think, if you think about it honestly, how many people took part in this, right? Not that many. if we're really, really honest, not that many people were long through here. Everyone thought the end of the world was coming, and 2008 fractals were the name of the game back here. So a lot of people have missed the entire move, and now they just don't want to believe that they're about to miss the entire run all the way to new all-time highs. So as always, I'm open to anything, lose this cycle low, and I become one of the biggest bears on this platform. But all the while we're above that, I remain very bullish and very optimistic. To the many people out there that are calling for a bubble, yeah, well, the Nasdaq's in a bubble. Look, this is a 7% annual slope, and so is this, okay? This is an actual bubble back from 98 through to about 2002 here. And as you can see, this is what a bubble looks like, okay? Huge deviation from the 7% annual slope. Whereas we had a minor deviation here, followed by a correction to the downside, and now look where we are. Not that much higher, okay? So this to me doesn't look anything like a bubble pop yet, and therefore I still think there is plenty of space to run to the upside before then we enter that period of deflation. So that is pretty much all I have to say on traditional markets at the moment. It's Friday. I don't, generally speaking, like to take on weekend risk and extra positions on a Friday. If the setup warrants it, then I will, but I don't really foresee myself adding any new positions on today's session. However, I do want to spend a lot of time now, the rest of this episode, talking about Bitcoin, because Bitcoin, for me, is where the focus needs to be at the moment over the next few weeks, particularly. So, first of all, hash rate, brand new all-time high. Look at this, okay? Someone knows something, okay? Do you know how much money it costs to do this? So somebody knows something. Capital expenditure and investment into this space is through the roof, and we're going to continue to see that. And you can see this here as well. The next difficulty change. This is such a significant increase in hash rate that the next difficulty adjustment is going to be north of 7%. Also, going back to this notion of traps, do you notice that these days there's a big difference in the interaction, not only with you, but with other big accounts? And this whole crypto Twitter space is essentially dead, right? There's only a few people out there with positivity left. Everyone else is like, nah, it's ruined, it's ruined, it's ruined. And that's just because they missed the move off the lows, right? But what we know from this is it's pretty safe to assume that the fun is a lot closer than most people realize, and a lot of people are going to be left behind. And if you're not convinced, let me convince you now. First of all, if we just assume that the cycle is going to repeat in the way it always does, which I still think is possibly not going to work out that way, but we'll come back to this idea in a minute. If we just assume for a second that the cycle is going to do what the cycle always does, well, there's still plenty of time for us to move up to around 100K, right? Give or take a few $1,000. The other thing that's worth pointing out is where we are at the moment relative to the halving date is exactly where we were in all of the prior cycles relative to their halving days. So this cycle really isn't different. I know a lot of people feel like it is, a lot of people think it is, a lot of people think 12K is coming and whatever, but the facts are the facts, the data is the data. We have done remarkably similar things relative to our next halving date as we always did in the prior cycles. Now, this is where things start to get really, really, really interesting for me personally, okay? If I draw your attention to these equidistant arcs that we've got here, okay, at the bottom. I'm drawing them pretty wonky, but you get the point. Now, starting at the left-hand side, you can see right around this sort of macro cycle, we get this huge impulse in Bitcoin, in this case, to the upside. Then at the end of the arc, equidistantly, we get another big impulsive move. It's the same here. This time we get a big impulsive move to the downside. And right where we are now, okay, just about to enter one of these big macro cycle, macro impulsive moves, okay? We're right around this space where we're either going to see a big down or a big up. But what's so interesting to me about this personally is, and you'll know this if you've been here before, I'm calling for this cycle low to show up any day now. Any day now, we're probably going to get this, whether it looks as low as I've got this marked or whether it looks something more like this. And then we break out, we get long on the breakout and the stock goes below the swing and we mark that as the cycle low, right? This is what I've been calling for some time. And I think if we do that, then we have a very good chance of snapping to 42K plus. And it just so happens to coincide with not only a 60-day cycle low, because of course there are 60-day cycle lows in the middle of these macro impulsive moves, but this next 60-day cycle low actually lines up with one of these macro impulsive arcs. So it tells me at least to be open to seeing a very, very explosive up or downside move, but the daily cycle is telling us that we're about to find that low, and thus it's more reasonable to expect and to be biased to the long side than it is to the downside. So as always, I'm open to anything, but as you can see, things kind of look like we're going to have a very good end to the year. I think it's also worth pointing out that whilst I've been very, very right for a lot of this year, the worst call I've made for sure was this one right here for Bitcoin. So if you're unfamiliar with this, I thought that Bitcoin was going to put in this left translated macro cycle top, meaning it peaks after around a year-ish. And then we spend 3 years in its first true secular bear market decline. And I also, this scribble up here was me illustrating that they were probably going to approve the ETF at the top and use it as a distribution tool. At least that was one hypothesis that I had. I said I wouldn't be surprised, and I thought this would harm the most amount of participants. Now, since then, you can see there's been a big deviation, hasn't there? We came into this cycle low and put in a consolidation cycle, about to find the next cycle low, instead of come tearing out of here in a parabola. And I said that if we were to do that, I would be getting ready to scratch this one off and say, yeah, absolutely nice idea, but no way going to happen, right? But going back to this and the 60-day cycle lows I just showed you, is it reasonable to expect one of these big macro impulsive moves? And if it was, right when this looked wrong, we could certainly start to see something like this occur, right? And whilst this wouldn't be exactly followed to the fractal, it would, however, probably look something kind of like this out of this next cycle low. Of course, the top would be shifted across to the right-hand side slightly, but overall, this wouldn't be the stupidest idea in the world. And I still think, given the amount of people looking at the 4-year halving cycle and assuming that history is going to repeat, right? History is going to repeat with right translated cycles, meaning we spend 3 years going up, 1 year in a bear market, 3 years going up, 1 year in a bear market, 3 years going up, 1 year in a bear market. And given the number of people that are expecting this exact same thing to repeat all over again, I've been saying the whole time, I think the way to harm the most amount of market participants is to moon this thing up for 1 year and then walk it down for 3, perhaps using that ETF as a distribution tool. So it's going to be really interesting to see how this plays out. Once I found this and I know that cycle low's coming, then things start to get really exciting for me personally. Hopping back into the charts, right? To be really clear, I do think this cycle low is due any day now, and once we get a swing and a reversal and a breakout of this downsloping purple resistance line, I will be adding along for Bitcoin. I will also be adding Coinbase, MicroStrategy, Riot, and Marathon once we get into that cycle low, and once that cycle low is confirmed for Bitcoin. I am still pushing this oil short, although, hang on, let me take this off a log. Yeah, if we get back above this upward sloping pink support line here, then I will be starting to do damage control, move stops down, because I don't want this trade to end up being in a loss at all at this point. We've got underneath it enough that we should be able to at least walk away with a break-even trade here. In terms of the stock market, we're still in no man's land, aren't we? So if we were to get some significant pullback to resistance and then a swing and bounce, we could maybe look at getting long there and putting a stop below. But really, we need to see this broken, don't we, to confirm that this is for real. This really is a new cycle ahead of us. We also need to see the Dow break out, and we also need to see the NASDAQ break out instead of get rejected again. So this could happen at any moment, but it hasn't happened yet. The Russell 2K, you know, this looks pretty bad so far. So again, we're still paying all of our attention on this downsloping pink resistance line. Get above there, and I think we can entertain longs. And lastly, look at the euro dollar, okay, rejected at resistance. So is it going to have a second crack and go? If so, then we'll probably see the dollar basket come off. But all the while that the euro is rejected at resistance and rolling over, then it's going to be difficult to see the dollar basket, the DXY, break down. So for now, this could well be breakdown, retest, looking for that resumption. But again, there's more work to do here. Notice how the yields continue to come off, right? Breakdown, retest, looking for that resumption. So the yields know, right? The 10-year yield is the chart of truth. And what does it know? Well, it knows the Fed's done hiking. So again, all the stars are aligned for a big face-melting year-end rally. But I do think that we probably need to get through the weekend. I will be paying attention to the Bitcoin market over the weekend, because I wouldn't be surprised if we get this and go on Saturday and Sunday. We're right around that timing window to see that. So if not, we'll get long on Monday or whenever the swing shows up. But overall, I'm not expecting to take too many new positions today. So I'm your boy Camel. I hope you found value here today. I hope you're doing well in life, and I hope you have a great weekend. And until next time, take care from me. All the best. Cheers. Bye.